What happens to your money if the stock market crashes? In March 2020, the stock market crashed 34% in 23 days. Sarah, a 28-year-old with $50,000 in her Roth IRA, watched her account balance drop to $33,000 on her phone. She panicked and sold everything. That single decision cost her over $100,000 by 2024. The crazy part? She didn't lose any money. She just quit right before the biggest comeback in history. If you have money in the stock market right now, you need to understand exactly what happens during a crash. Because what you do in the next 5 minutes could literally save you 6 figures. Let's start with the most important truth nobody tells beginners. A market crash is not the same thing as losing money. Here's why. When you buy a share of the S&P 500 through a Roth IRA or a 401k, you own a tiny piece of 500 companies. Apple, Microsoft, Tesla, Coca-Cola, all of them. When the market crashes, those companies don't disappear. Apple's factories don't burn down. Microsoft's software doesn't stop working. The intrinsic value of these businesses stays intact. What changes is the price people are willing to pay for them today. Think of it like real estate. If you own a house worth $500,000 and the neighborhood drops 30% in value overnight, your house is still a functioning house. It still has walls, electricity, a roof. The only thing that changed is what some random buyer thinks it's worth this second. You don't lose money until you sell. The 2008 financial crisis proves this. Someone who invested $10,000 in an S&P 500 index fund on January 1, 2008, watched it drop to $6,600 by March 2009. Brutal. But if they held that investment, by 2024 it would have grown to over $220,000. That crash wasn't a loss. It was a sale sign nobody recognized. Now let's talk about what actually happens to your specific accounts when the market crashes. Your Roth IRA doesn't get frozen. Your 401k doesn't get locked. Your Fidelity brokerage account doesn't disappear. The money is still yours. The only thing changing is the number on the screen. If you have $60,000 in a Roth IRA invested in VU, an S&P 500 fund, and the market drops 25%, your account now shows $45,000. But here's the critical part. You can still withdraw from it. You can still contribute to it. You haven't lost access. You just haven't sold. Most people panic here. They see red numbers. Their brain floods with cortisol, the stress hormone. It's an evolutionary survival mechanism. When our ancestors saw danger, they ran. But in the stock market, running is usually the worst possible decision. Here's what actually happens psychologically. During a crash, two voices fight for control. Voice 1 screams, "Sell now or lose everything." Voice 2 whispers, "Stick to the plan." Voice 1 feels louder because fear is loud. But voice 2 is right 90% of the time. The data is undeniable. Between 1950 and 2023, the stock market crashed 20% or more, exactly 26 times. Investors who sold during every single crash and bought back in after recovery would have made money every single time. But they had to live through the selling moment, which most people don't do. Here's your action plan for when, not if, when, the market crashes next. First, stop checking your account balance every day. Seriously, most people who panic sell are checking their portfolio multiple times daily. They're day traders without realizing it. If you check once a month or once a quarter instead, the emotional impact drops dramatically. Second, zoom out. Pull up a 10-year chart of the S&P 500 instead of a 30-day chart. Every crash becomes a tiny dip in a massive upward mountain. Your brain will process that differently. Third, if you have cash on the sidelines and the market crashes 30%, Congratulations! You can now buy the world's best companies at a discount. This is literally how wealthy people get wealthier. They buy when everyone else is selling. Fourth, ask yourself an honest question. Do you need this money in the next 3 years? If no, a crash has zero impact on your life. If yes, that money shouldn't be in the stock market at all. It should be in a high-yield savings account earning 4.5% guaranteed. Your money doesn't disappear in a crash. Your money only disappears if you panic sell. And panic selling is the most expensive emotional decision most Americans make. If this actually changed how you think about market crashes, subscribe right now. We post videos every single week about real strategies people use to become financially independent. By 40, hit that bell so you don't miss the next one. Your future self is watching. Make the right choice.